Brilliant. Well, when he asked the question about who likes tax, I noticed that no hands went up. But I'll show you guys, I'll try and keep you engaged. Although tax is not the most exciting of topics, it's definitely a very important one, especially for those of you in property. So I'll try and keep you engaged. Hopefully you'll go away, take a few nuggets from today's session, which hopefully will help you in your property businesses. Right, okay, so let's go straight into it. I've got quite a lot of content to cover, so I'm going to kind of go through this quite swiftly. But my aim is to try and open it up to more question and answers and try and keep it interactive. Although I will try and keep it interactive throughout the presentation as well. So we'll look at, I'll do a brief introduction to Blue Water, which is the firm of accountants that I own. We'll do a general overview of the UK tax system. So we'll kind of start from the very basics and we'll just build that up and kind of look at slightly more advanced and complex structures as well. We'll kind of cover some of the other tax implications of investing in property. And obviously we'll look at the structure overall as well. And then towards the end, I will kind of just touch on a few different areas that are probably quite topical, quite interesting areas for some of you and as you might be engaged in some of those activities. Right, okay, so those are my details. Feel free to take a picture, a screenshot. I don't carry business cards, unfortunately. We're now in this kind of new age where there's, the QR code. So I do have a QR code, by the way, I can share with you as well, but feel free to take a snapshot of that. Okay, so as a business, what's our goal? So ultimately, we at Blue Water Accountants, we focus on working with property investors and developers, as well as construction businesses. So we only work with clients in the property sector, and we don't kind of work outside of that sector. But our goal is ultimately to help you guys to create, retain, and maximize your profits. And that's obviously with our accounting and tax knowledge. So as I mentioned, the kind of three core areas that we work with is landlords, property investors, developers, construction trades businesses, as well as architects and surveyors. And if I was to kind of if I had a pie chart and kind of broke it all down, landlords and property investors would probably be around about 70-75% of our client base. Brilliant. So, okay, so when it comes to landlords and property investors, the kind of typical clients that we deal with, usually the people who are slightly advanced in their property journey. So minimum of 3 properties or more. If you have those, either you could be owning them or you could be controlling them if you're doing rent to rents. And it could be a mixture of residential, commercial lets, HMOs, serviced accommodation, or even a combination of all of those above. We also work with property developers, again, people who are a little bit established, got development pipelines of about £1 million or more, and you could be doing anything, land developments, commercial industrial units, or even conversions. Not probably many of you here, but this is kind of just the other kind of strand of our businesses, which is the construction business and architects and surveyors, so I'll kind of skip through this. So how do we help our clients? So there's 3 ways that we help our clients. At the base is just getting control of your business finances. So at a very basic level, that's just ensuring that you get your accounts, tax returns, and everything filed on time, and that you know what your tax liabilities are and that you pay them by the due dates. But actually, if you take that a little bit further, so once people are a bit advanced in their journeys and they don't want to be really dealing with the finances, that's where we can come in and help and kind of start implementing finance systems in your businesses, whether that's an accounting system, whether that's taking away the bookkeeping stress and headache away from yourselves and managing it for you, whether that's especially in your property businesses, when you're dealing with kind of lots of tenants, managing those tenants, putting software in place, we can help with all of that. The next part of our business is obviously tax. It's important that tax and the business is structured in the right way, and that's where we help you to get things structured in the right way. And finally, it's all about once you've got the business, it's growing, it's then planning ahead about the long term. You know, what's the plan for the future? What's the exit strategy? And some of you or some people might think that I'm actually never planning to exit my business. But one of the things that everybody will have an exit point at some point. And so at that point, there is an exit, and it's about what plan do you have for that moment in time. So it's about helping you there, and that could be pensions, it could be legacy planning, it could be ensuring that the assets are passed on to your loved ones in the most tax efficient way, and not passed on, and not HMRC taking the lion's share away from you. So I won't really go into the details of all of this, but as I mentioned, the compliance service at the basic level, most people think that that's all accountants do, which is just accounts and tax returns. Actually, there's a lot more. It's about, like I said, taking away the day-to-day finances and managing all that for you. And then at a more advanced level, it's about kind of meeting you regularly, helping you to understand the real numbers of the business. You know, what are your yields? What are your rental yields? What are your kind of key metrics that you should be measuring to understand how your business is performing? And it's about helping you to understand those and helping you to make decisions from those numbers and that data to help you in your business journey. So in terms of on the tax advice, so we help with clients with anything from structuring their businesses, incorporating property portfolios. It could be advice around SDLT or capital gains tax, VAT or capital allowances. R&D tax credits is not something that affects property people, so I won't really go into that. But that's kind of a broad overview of how we help. And then in terms of the long-term plans, as I touched earlier, it's all about kind of planning for the long-term, the exit. Well, before the exit, it's also ensuring that when you retire, that you've got a plan in place for retirement, and you understand, okay, well, how much income is it that you're going to need for retirement? Where's that income going to come from? Have you thought about all of that? And then obviously estate and inheritance planning as well. Okay, brilliant. So let's move on. So when we think about how people are taxed, usually we need to think from an employment perspective. So every individual could be either an employee, you could be self-employed, or you could be a director or shareholder of a limited company. And depending on where you fit in, the tax obviously arrangement will be the tax will be deducted separately depending on what your status is. So as an employee, for example, at some point in time, or some of you may currently also be employees of a company, or you might have been employed previously, you will know that your tax is deducted through PAYE. It's the employer's responsibility to deduct your tax, work out your tax liabilities, and you pay it through PAYE. All you receive is the net income. You don't need to worry about your taxes. However, when you then move on to becoming self-employed, your tax is then deducted through self-assessment. So what you do is you either you do your own taxes at the end of the year, or you might engage an accountant to prepare your taxes, and they will work out your tax liability, and you'll pay that tax 9 months after the tax year. Sorry, 10 months for self-employed. 10 months after the tax year. Whereas as an employee, your tax is deducted every single month. So you receive the net income. But as self-employed, you receive gross income, and then you pay the tax a year later, 10 months after the tax return deadline. As a director or a shareholder, you could be employed, or you could be receiving dividends as a shareholder. So in that instance, if you are employed by your own company, you may be paying tax through PAYE, depending on how much income you're taking, or you may be paying tax through self-assessment if you are taking dividends from your company. So you're in the kind of mixed area there. Just to kind of look at some of the numbers, just to help you understand. So obviously in the UK, we have a number of different tax bands when it comes to income. So at the basic rate, everybody pays tax at 20%. At the higher rate, you pay tax at 40%. And then at the additional rate, you pay tax at 45%. Now, before you start paying tax at 20%, everybody has a personal allowance. So that personal allowance for the current tax year is £12,570. So you can earn £12,570 before paying any tax. Once you start earning above this amount and you go up to about 50 grand a year, you're in the basic rate tax band, and that's where you pay tax at 20%. Once you go beyond the 50 grand, the top rate of the basic rate band, and you're earning between 50 to 125,000 pounds, then you're paying tax at 40%. Now, common question that we get is, if I go over into the high rate band, does that mean all of my income is taxed at 40%? And the answer to that is no, it's not. So it's all paid in stages. So up to 50 grand, you'll pay tax at, well, up to 12,570, you won't pay any tax. Up to 50 grand, between 12,570 and 50 grand, you'll pay 20%. And then anything over 50 grand, up to 125 grand, you'll pay tax at 40%. And then once you're over that limit, then you pay tax at 45%. However, this is where there's something else that you need to be aware of, which is not kind of illustrated here. But once you start earning above £125,000 a year, what happens is you start losing your tax-free allowance.